Hey guys, Akil Stokes here with Tier1Trading.com. Welcome back to another episode of the Weekend Trading Edge video. If you guys are brand new, this is a weekly video I do on YouTube, taking you through some of the best trading ideas that are on my radar for the week to come. I also do a lot of other stuff during YouTube during the week as well. There's 3 Trading Coach podcast episodes. There's a midweek markup video. There's also the Trader Coffee Break with Jason Greystone and myself. So if you aren't subscribed already, make sure you subscribe to the channel. That way you don't miss all of the goodness that I'm giving you throughout each week. And if you're someone that's watching this and you're not subscribed, do me a favor, do it. I'm trying to reach 50,000 subscriptions by the end of this year, so everyone helps. And if you have someone that is into trading and whatnot, advise them to subscribe as well. Help me out and helps them out too. Now, today we're going to look at 5 trading opportunities that are on my radar, including a little bit of a pop quiz at the end to see how well you've been paying attention to these videos on technical analysis since I've been doing them. But first, I want to do a little bit of house cleaning. One, for you guys that are on the Tier 1 trading platform, a pretty cool new feature was just put onto the site. As you know, we've been doing a lot of updates over the last I don't know how many months, many on the back end that you don't see, some visual, like the little scrolly thing in the calendar at the top. But now we have something that is extremely practical. It is going to be a search button. So if you go to Knowledge Base, you go to the Q&A section. The Q&As are weekly videos that we do, or not weekly videos, weekly live sessions we do each and every Monday, really answering any questions that you guys have or really covering any really cool topics from the basics to the advanced that occur throughout the week or that just pop into my mind. And these are thought of as pretty much the most valuable sessions on the site. It's really kind of a chance to get away from trading, like in a live trading room, and really dig into how to become a trader. And we've been archiving these sessions since we started Tier 1 Trading back in 2018. So there's a lot of topics are covered multiple times. Sometimes it could be a little bit difficult to kind of go back and find something, right? Again, over the last, 3-4 years or whatnot. So now there's a nice little search thing in here. If you want to find something like cipher pattern, for example, let's just type in cipher pattern. And now it's going to bring you a search of not only Q&A sessions, but all the different videos that we've done covering that subject. So it makes it a little bit easier to kind of, if you have a question or a specific topic that you want to learn more about, just type it into the search and then boom, all this fun stuff comes up for you. So that's one thing. One more thing I want to mention before we hop into the charts, and I can't talk too much about it right now because I haven't gotten kind of a response email, but one of our members is also a programmer, developer. He's come up with this really cool piece of software that we think is going to be very helpful, and he's looking for testers to kind of take it, break it, give advice, tell them what could be done better, is the functionality good, all that fun stuff. So once I get a response email, I'm going to open it up to you guys on the platform. If you're interested in downloading it, installing it, testing it, seeing if it is beneficial to your day-to-day trading or day-to-day analysis, and of course giving him feedback. So again, maybe I'll have that for you maybe by the beginning of the week, but keep eyes up or heads up for an email on that subject as well. All right, let's hop into the charts. And remember, there's a nice little quiz at the end to test how well you've been paying attention to really the trading philosophy that we teach here at Tier 1 Trading. All right, so the first pair we're gonna start off is on the euro dollar. And this is an interesting one. I actually have some analysis for both a trend continuation short opportunity and a counter trade long opportunity. If you've been following us for any amount of time here, you'll know that I'm not a believer in there's bullish analysis and bearish analysis. I'm just a believer that there is general analysis, and general analysis is what will tell you if and how you can get bullish, if and how you can get bearish. And I want to walk you out here to what has recently happened on the euro dollar, and this is going to piggyback some of the live room stuff from Thursday. But recently, popping out to the daily, you're going to see that we have come down to a previous level of structure, our lows right here. And if you look close, we have violated that structure. Remember, violation means not only a break below, but a close below. So the body of the candlestick needs to close below. So we have this 4-step process at Tier 1 called IPDE, Identify, Predict, Decide, execute. And that's the 4-step process that essentially keeps you on track and keeps you consistent with your analysis on a day-to-day basis. And based on what we identified, a lower low, lower close, it allows us to make a prediction. Price is likely to continue lower. After we make that prediction, that gives us a bias on how we want to attack the market. And then we can refer to our trading plan on how or if we can take advantage of that opportunity. So we have a situation right here where we have a break and close below. So the analysis tells us, or our prediction is that we're likely to continue lower and have a trend continuation, a bearish trend continuation opportunity down to one of these levels, a very conservative level being about, we've been saying 15 even, it's like 114.94, but let's just say 115 even, and then a little bit of a lower level below that, about 114.50s. So if you're a trader looking to get short, this is already almost a prime pullback opportunity, because what price action has done is this: we've violated that level, we've put in a little bit of a retracement, right? We know in strong trends come shallow retracements. We've extended lower here. Now this is interesting because on the 4-hour we don't have a new lower low, lower close. That's one of the things that's a little bit bothersome about this particular situation. And then we've retraced back here. So if you're looking for a shorting opportunity, right, this is going to be, obviously waiting for your reason to get involved. This is going to be one of the best places you can get involved because it is a pullback, right? You know you're wrong if price action violates this previous level of structure right here. So whether you're shooting for a retest of the lows or an extension down to that 115 level, you've got a really, really, really good risk reward. Now, the thing that poo-poos this opportunity for me, yes, that is a technical term that professional traders use, poo-poo, right, is that technically we don't have a lower low, lower close after our new structure low. So if this is our new structure low right here, right, do we ever get a lower low, lower close below this line? Well, no, right? This wick messes up. So no, no, no. Everything is within these new lows. So technically we don't have that new lower low, lower close, which technically means we can't call this an outside return, which technically means this isn't a level that we're really eyeballing as a retracement. So it's one of those weird situations where, again, we always talk about we want to trade by rules, and we want to apply rules to the market because that's the only thing that's going to keep us consistent. But as traders, we need to understand that the market can care less about our rules. The market's going to do what it wants when it wants. It's not here to follow our rules. It is like, again, keeping a wild animal, a wild tiger in a very small cage in your studio apartment and being upset when the tiger mauls you. Like, what do you expect? So we have to be aware of that as traders and understand that sometimes common sense just isn't going to line up with rules. And that's just the harsh reality. Jason and myself talked about that a few coffee break episodes ago, where it's like we did personality types and talking about the person that is like a perfectionist. This is something that really, really bothers them because it doesn't make sense. And unfortunately, you just have to deal with not everything making sense in the market. It's, think about it like this. The market is nothing more than a visual representation of all of the action of its participants. And the participants are human beings. And ask yourself, do human beings make sense? No, we don't make rational decisions all the time. So it fits right into that. So that brings me to the second category, or the second trading opportunity. If we can do something like this where we violate this level, whether it's a head and shoulders or not, if we can violate this level, my analysis tells me that we're likely to continue up. Now, I don't care if this is just a pullback in the bigger scheme of things, or if it's maybe the start of a new trend. It doesn't matter. The fact is, my prediction is that we're going to continue up. And if we're going to continue up, the question is, where are we going to continue up to, right? You can see this was the level of structure that was broken. The next relevant level of structure is going to be an inside level of structure right here. Bang. We can probably take a Fibonacci retracement. Looks like a 50% as well. Swing high to swing low, our most recent move. Right above, I don't even know where the low of this is at. I'm drawing at the wrong point. Right close to a 50% retracement as well. So a little bit of Fibonacci influence there. But the point is, not to get too kind of detailed here in this video, I would expect a move from this level right here, 116.12s, back up to about 116.64, 65. So that's a good level to look for coming up on this week ahead. So the euro dollar was my only Forex pair that I want to take a look at this week. Next, we're going to head over to the DAX, right? The GER30 here on the 4-hour. And we're going to start on the daily just to give you guys some perspective of what we've been doing, right? You can see that our most recent move is that we've come into a previous level of structure. Each time we've hit that level of structure, we've seen some nice rejections, rejection there, and then we ended the week with a big rejection there. In general, with most indices, I have a bullish bias, meaning that's always going to be the path of least resistance. Not this one necessarily, but if you look at the recent trend, we have been bullish. We have not taken out these lows. I would expect us to continue bullish. So I do have that bullish bias based on the overall trend and the most recent movement with price action. Now, if we go down to our lower time frame, here's what I'm expecting, right? I would expect a move up to a previous level of structure, and two previous level of structure stand out. One is going to be this intermediate level right here. Another one is going to be these highs up here, so a little bit of consolidation before the breakout. And if you're asking yourself, how do I identify these levels of structure? And we actually have a good Q&A session coming up on Monday with Hussein, who's been struggling with this. It starts by just reading a price chart, just being able to draw out the ebbs and flows, right? First, very, very broadly, and identify kind of the main levels of structure. We know that major structure are going to be outside. The retracements are going to be major structure, or outside structure is going to be major structure. Inside structure is going to be more of a minor structure. Same thing with like smaller retracements. And then we can get detailed from there and really dig into kind of like candlestick analysis and the shapes of candles and the wicks and all that fun stuff. But that's how I identify these levels. So looking at this, again, the first level would be right here. The second level would be right in this area up here. And if we were to get up into that area, we actually have an advanced pattern setting up as well, right? If I just draw this out very quickly, I just want to get my Fibonacci on here just to make sure I'm doing it right. We're going to have a potential cipher pattern, X to A to B, B to C, and then our CD completion would come right up here, which is right inside that zone that I just drew out for you. So you're probably asking yourself, Akil, I thought you said you have a bullish bias. Why are you looking for what would be a bearish trend? Well, remember, the bullish bias is my analysis on the higher time frame. It's simply setting up to make a prediction on what price action is likely to do next. And that is, I don't think we're going to break and violate this level to the downside. I think we're going to push back up. So as a counter trend trader, I'm asking myself, if we push back up, where's the next level of relief, right? We're not going to go up forever. We're probably going to run into a place where the bulls want to take some profit. We're going to see a little bit of relief. And as a counter trend trader, that's all we're looking for, is a little bit of relief. I'm not looking for this cipher pattern to complete and give me a very large reversal to the downside. I'm honestly just looking for a move really from this 786 back down to this 382 and maybe this 618 at most. So again, it's using general analysis to kind of set up those predictions of the market and then kind of visualize and start thinking about how you can handle certain situations if they were to occur. That way we're not late and we don't end up in a panic mode. We're kind of early and we're a lot more comfortable and confident if price action does fulfill that prediction. Next up is going to be some cryptocurrencies. We're going to head over to Bitcoin. Bitcoin's got a few things happening. One, Bitcoin's got a bat pattern at market. So this is another one of our advanced pattern formations. Unlike the cipher, this is one of the W or M shape patterns, and you'll know exactly what that means when I draw it out. X to A to B, B to C, and then a CD completion right up here at our 886. So you see we ended the week in this zone. It's a W-shaped pattern because it looks kind of like a W, like that. And if it was inverted, it'd be an M. So we call them W and M-shaped patterns. So this is an at-market sell right now. If you are a pattern trader, this is an at-market sell. We are still above the initial entry, so you're not entering at a worse position. We have not violated the X leg, so the pattern's integrity has not been broken. So you can look for a sell here on the open on Bitcoin if you are a bat pattern trader. Thinking ahead, if we were to violate this level, right, looking at the bigger picture, if we were to violate this level, what could happen? Well, if we were to violate this level, going back to the IPDE process, right, identify a break and close above, predict to continue higher, then I would predict that we're likely to go up to this level right here. So if you are a bear, a seller, you can look to sell at market. If you are a buyer, you can look for, you can wait and start kind of visualizing and predicting what will need to happen for the potential buy. Some of you guys looking at this and saying, hey, could this be like a double-headed head and shoulder too? Yeah, we can easily see a retracement from the bat pattern that can take us down here. The market can maybe play around a little bit and then break higher. And then all of a sudden, if I can find it here, you've got yourself a head and shoulder pattern as well. So, make these predictions, guys. I put up a poll question the other day, earlier this week, I should say, about how do you make predictions? Meaning, do you leave, I'm assuming you look at the markets and each and every day, do you leave your notes up or do you take them down? And there's really no right or wrong answer. It's just, I wanted to make you think about it. There are pros and cons of each, right? If you leave your notes up, right, you can make these predictions and you come back the next day and you know exactly what you're looking for. If you take your notes down, it's just repetition. It's making sure that you're doing the same analysis each day. And if you are doing the same analysis each day, then you should be really marking up your charts the same way. Now, I do think there's a pro of, I guess the negative of erasing them every day is you may forget something. But again, that's on you. You've got to be accountable and make sure you're skilled in your identification. I think the benefit of erasing them and redoing your analysis every day is the fact that you're not going to miss something, right? Sometimes you'll make these analysis, like gold is a great example. We had a prediction on gold for like 2 months and it never played out. So you run the risk of making a prediction and just getting bored, right? You're not doing any new analysis. You're just kind of checking up to see if the original analysis is done. And you can kind of get bored to sleep where you're like, nothing. And you may miss something. Whereas if you're erasing them every day and redoing them, you're going to limit that opportunity of missing something because every day you're starting fresh and you never know, right, when you may miss something that could be very important. I just spoke to a trader and I put this tweet out. I spoke to a trader who basically asked the same question twice. He asked me a question. I responded to the question with the exact answer and then asked it again. And in my head, I didn't say this to the trader, but in my head, I'm like, this doesn't really give me a good vibe about you being successful, right? Because in order to be a consistently profitable trader, right, you need to be consistent, obviously, but you need to pay attention to detail, right? So if there's an answer in one of my responses and you don't see that answer and you ask the same question again, that shows me that you either kind of rushed through it or there's something in you where you're not paying enough attention to detail. And if we translate that to the price chart, that's going to be a killer because trading is about finding and executing the very smallest of edges. I think of it as like looking for a needle in a haystack, but with clues. Meaning that most of what the market gives you is junk, it's fluff, it's distractions. But for those who can kind of weed through those distractions, those junk, they're able to find that little needle in the haystack or diamond in the rough, whatever analogy you want to use. And those are going to be your good trading opportunities. If you're someone that is missing them, because trust me, they don't come too often. I was going to make this video about frequency earlier, but it's been a busy weekend already, and I'm really tired, so I didn't feel like creating a lesson before the technical analysis. But the lesson was going to be about understanding how there aren't as many good trading opportunities as you think, which makes the ones that you do get, your grade A ones, even more important because those chances don't really come too often. So you got to pay attention to details. And I think that's a benefit of doing your analysis every day. Will it take a little bit more time? Yes. Will it keep you from being lazy? Yes. Is that helpful for your trading? That's something you have to answer. Is it worth your time? For me, it is. So potential bat pattern here, potential head and shoulders, potential just break of the neckline and push up again. If you haven't seen that midweek markup, make sure you watch it. It was a very, very, very powerful lesson. The response has been amazing. If you don't know what the weekend or the midweek markup is, it means you're not subscribed to the channel. Subscribe to the channel right now. Again, the goal is to hit 50,000 subscribers by the end of the year. But mainly it's for you guys, because if you're missing stuff, you don't want to do that, right? You're watching this channel because you want to become a better trader. So you need to be taking in everything that I put out. Trust me, it's free. Why would you not do it? So let's go to the next one, Ethereum. Same situation here, almost textbook the same, just it hasn't happened yet. So you can see same, if I get my tools right, nope, that's not the one I wanted. What did I want here? Triangle. Yep, there we go. Same type of bat pattern, X to A to B, B to C, C to D. Only difference is this one has not completed yet. zoop, 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 zoop. So you got a little bit more time there. Same thing with the higher time frame, where it's like, hey, this is our next level of structure. Not as much room here, but if we break above this X leg, then we're likely to continue higher, and you can get a good view of that on the daily as well. So similar, just not as much room here. Now, here's the quiz question I want to ask you, because I'm going to look at one more crypto. This is Ripple, right? And Ripple, right? This is going to look like the same exact thing, right? Where we've got, excuse me, let me draw my fibs on, swing high to swing low, right there, right? We've got an X to A to B, B to C, CD completion up here, potential bat pattern for the sell, same as Ethereum, same as Bitcoin. Now, the other prediction, the other predictions are a little bit different from this one as far as like the violation of the pattern to move higher. And I want to ask you why that is, right? So take a second, look at this chart. I'll leave it up for a few seconds. Look at this, and I'm going to take you back to Bitcoin. And we'll go on to daily, make it easier. I'll erase it, make it naked for you. Look at Bitcoin. And again, this is the level we want to see violated to predict a move higher. Look at Ethereum. Again, I'll delete the chart. This is the level we want to see violated in order to predict a move higher. Now look at Ripple. What is the difference here between Ripple? Here's our X leg right here. Here's our higher level, and the other two. Pause the tape. I'm about to give you the answer, so pause the tape if you don't want it to be spoiled, right? The difference is this, and this is where candlestick analysis comes in handy. The difference is this. Look at this candlestick here on Ripple. Does that exist on the other two? It does not. So once we violate that X leg, it is clear sailing, right? There's nothing but room and opportunity to move higher, right? There's nothing there. We're inside this big high momentum candle, right? Ethereum the same way. Again, a little bit smaller of a range, but nothing big high momentum candle, nothing in the way here. Ripple, we've got this wick here. And what this wick means, again, this is the importance of knowing kind of the micro level of just like, what does a candlestick mean? This candlestick means a rejection, right? If we understand how to read a candlestick, this is a bearish candle. So the open is up here. The close is down here, the extreme low is here, the extreme high is here. So if I were just to draw this candle out on a chart, just using lines, right? I know that price opened here. At one point, it went all the way down here, right, to that extreme. I don't know what order it comes in, but it just happened. At some point, it went all the way up here, and ultimately was rejected, and it closed down here. So this tells me, right, this is a level that the buyers tried to push up in the past, and what happened? They got rejected, they got defeated, they got smacked in the face. Let me insert like a Stone Cold Steve Austin, like Stone Cold Stunner, right? In this video. So that means that even if we break these highs right here, this doesn't necessarily mean it's fair game up to this level. Why? Because we've tried that before and we've lost. So it's not necessarily a trading opportunity that I'm interested in. For me, in this scenario, I would need the highs of this high to be broken in order for me to make that prediction higher. So again, paying attention to the details. It's the small things, and it's sometimes it's these very small things that will keep you out of a bad trading opportunity or put you into a good trading opportunity. And that's what trading is about, right? We know that most traders fail because of not massively big mistakes. A lot of traders fail because of well, if we go back to Mark Douglas's kind of triangle of trading, right? We know that we have like the failing traders at the bottom, like 50%, and then we have like the boomer busters, he's like 40 to 30%, and then you have the successful traders, right? So the ones down here in the boomer bust or in the failing area, they just do dumb stuff. These are the ones that, you know, too much leverage, get margin call, you know, no position sizing strategy, just close your eyes and push a button, you know, all that dumb stuff. They just do dumb stuff. They're reckless gamblers. The ones at the top, these are the successful traders, right? These are the ones that are very good, right? And there's different levels of success. There are good traders, great traders, super traders, all that fun stuff. The boom and busters, these are the ones in the middle. These are the ones that are, they're better than your average trader. They're good enough not to blow their account and do anything dumb, but they haven't found that last thing that's going to take them up to like the next level. And a lot of the time they're stuck here, not because of big, massive mistakes, right? They don't do the dumb stuff, but very small mistakes. And they always kind of end up at break even. A lot of you guys are probably shaking your head right now like, yeah, that's me. That's me. That was me for the longest time. So to get from this level to this level, it really is the smallest thing. And paying attention to details like this and being able to stay out of that trade and maybe avoid a loser, right? That could be the difference between you staying in that middle section or reaching above and progressing as a trader.